Okay, I'm going to make another video with a clean screen to show you guys how I trade Bitcoin using CHoCh, also using order blocks and breaks of structure. I'm on the 1 hour time frame on my demo account using MetaTrader 4. Today is July the 23rd, 2022. It is exactly 3:02 p.m. And so the way I trade this is, as you can see, from this area here up to this area here, it was an uptrend. And so we're making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows, so on and so forth, all the way up. But at some point at this high right here, the direction changed. So this is a higher high, and this is a higher low, and this is a higher high, and this is a higher low. But based on the fact that it changed, now it's going down, we would have to look at what broke structure and what caused structure to break. So at this low here, I would take a line and draw it to the point or the wick of this red candle here that pushed down. And then, because I like my lines to be exactly horizontal, I would make that line horizontal. And so price, let me zoom into this a little bit. Price, based on this horizontal line, broke and closed below this horizontal line. So next I would ask myself, at what point did this price, or what caused this price to break and close below that horizontal line? And this green candle right here is the last green candle that was going up before price pushed down. So that candle is my order block. This is where I would draw my order block at, right here. That's my order block. And that basically tells me that if price comes back to that point at some time, or this area at some time, this order block at some time, and it doesn't break through the upside of it here, but it gets into it within 50%, I would want to take a sale. And I'm going to zoom out again. Since the price of Bitcoin has been going down and it's still going down, I want to definitely keep that order block in mind. So I'm gonna stretch this order block out here just a little bit more. Let me do it just a little bit more, because at some point it has to come back here, but I don't know at what point it will come back. So I want to make sure I got enough room on it to breathe. So right now, the next breaking point would be this low here. And so I'm going to draw that out, make sure the lines on that are exactly horizontal across. And so I'll wait until price goes back up to here and see the reaction on it. So to just go over what I uh, marked out, I'm on a 1 hour time frame. So I'll make this white. This is a 1 hour order block. This is a 1 hour order block. This is a break of structure to the downside, and I'm gonna mark that out. Man, I can't talk today. It's a break of structure to the downside. Make that a little smaller. And the reason that's a break of structure is because here's the low of the lower low at the end of this wick. And I drew a horizontal line across, and this red candle here broke below the lower low of this wick and closed, and now you see price continuing to go down. Now, if I wanted to take a sale here, I could. And matter of fact, I think I'll take one. I'm gonna do a 3-cent lot. I'm gonna sell, and I put on sale, and I'm expecting price to go at least to here and close that order. Once it closes that order, goes to here and closes that order, it'll go here next. But before it goes here or even down here, it's going to push back up. If it pushes back up to this 1 hour order block, it usually pushes within 50% of the order block. So if I have to put a line at the 50% mark or halfway to the order block, it's roughly about right there. Now I'm just eyeballing that, but if I wanted to, I could take my fib tube and do this. And where you see this entry at, that's 50%. So I was almost dead on. So now that I got it at 50%, I'm gonna take the fib tube off again. Well, technically I can leave it on, but the take profits start once price comes back up, goes within 50%, and then continues down. So 12 times the profit amount would be right here, right where almost right at where I got my take profit at. So I'm gonna take the field tool out, and I'm gonna put another. Well, I don't have it. I was gonna put another uh, application on there, but I don't have it. But we're gonna wait and see what happens after this goes back into profit and continues down. It should get right here and close my order and take profit, or it may go here and close my order and take profit. At any rate, I'm gonna draw another line from the end point of that wick to here, and to make sure I got that perfectly horizontal, I'm gonna go in here and make these values the same exact numbers. That way I know it's perfectly horizontal. So when price either gets to this first horizontal line or this second horizontal line, it's going to reverse and go back up. And until it gets there, from here, where I got in at, all the way down to here, and I'll draw another horizontal line so you know what I'm talking about, to this low here. Let me make the values the same on it. So where I got in at from here all the way down to here is liquidity. So I'm going to denote the liquidity with dollar signs, and make that just Arial, and I'm going to make this white. And what the dollar signs basically means is, until it gets down to here, this is order flow. This is where the money is. And as it comes down and pulls back, it comes down and pulls back, all it's doing is taking what we call imbalance out, and liquidity out. Money is liquidity. So if you look at, let me see here, how do I want to draw this out for you guys? If you look at from this wick here to this wick, and I'll put this on here on the chart for just a second. From this wick here to that wick there, this is liquidity, because price has not retraced here yet. Well, it did, but not from over here yet. But we're not worried about what's over here. We're worried about what's right here. So when this candle pushed up and it came back, it took out the liquidity to this line right here. There's still a little bit of liquidity right here. So technically, if I wanted to draw this out for you guys, I could do this. Wherever there's dollar signs at, there's liquidity. So there's liquidity right below that line. And then if it continues below this red dashed line, there's more liquidity. There's liquidity all the way down to here. So technically, these dollar signs would have to go below here, denoting the liquidity, because price should come all the way down to this line, hit this line, push through it, and then go back up. And once it goes back up, it probably won't go all the way back to the top of here, but it'll go back up far enough to take out some of this liquidity that has never been touched yet because price has not retraced yet. It'll go back up far enough to take out some of this liquidity. So that's why I have the order blocks. This is an order block. Technically, this is an order block. And I'll go ahead and draw that out too so you guys can see that. Let me make this a little bit smaller. So insert shapes rectangle. This green candle right here, that's a doji. That's an order block. But I know it's probably going to push past that one. So I'm going to draw out this order block right here. This is an order block. And this is a 1 hour order block. Everything I drew on here, other than the imbalance area, is a 1 hour order block. So move it to right there. Man, that's thick. I'm going to change the texture properties on that to Arial and make that 12. Yeah, there we go. That's a lot better, a lot more legible. So now I'm going to do the same thing here. One hour order block. So this is an order block, 1 hour. This is an order block, 1 hour, and this is imbalance. So price is actually coming down a little bit, to fill the rest of this imbalance right here. So technically, even though all of this was imbalanced, since price did come down and fill some of it, it's no longer imbalanced that big. It's imbalanced to right here. So as you can see, price is in a downtrend and it's coming down to fill this imbalance. So I'm gonna just move that all the way over to here so we'll know exactly where that is. And I'm gonna leave these money symbols here because as it's selling, it's coming down, filling orders or taking orders as it goes down with liquidity and imbalance. This right here is imbalance, and I'm going to make this imbalance a different color. Let me make this a different color. What color do I want to make this? Make it this. So that's imbalance. Change the money to black because it's sitting in there so you guys can see it. So there we go. So the money, which is liquidity and imbalance, is there. It's also here, and it's also here. So instead of drawing 3 imbalanced zones, I'm going to just draw one. So from the wick of this green candle here, all the way back up to there, that is imbalance. That means from this push all the way up to here, which is imbalance, that means price took off and the sellers didn't have enough time to react to get in to try to buy. So if they were selling right here and this big push went up and they didn't have time to buy, they got caught in this trap and more than likely either closed their positions or maybe they were still hanging on thinking it was going to come back and maybe they closed up here somewhere. And then it came back, pushed up again, making a higher high, came down, making a higher low, and then pushed up again. So at some point, it's also going to have to go to this lower low and then all the way down to this lower low. And then you have imbalance from here to here. So it's going to have to come back and get that imbalance. It's definitely going to have to come back and get that imbalance. Um, let me see here. Where's the rest of this imbalance? There's none down here. But before it made this big push up, from the wick of this red candle up to the body of that red candle right there, that's an order block. And within this order block, this push up here, this is an order block. So shapes rectangle. I would draw this red candle and wick out to here as an order block. I'm gonna make that blue, same as the other order blocks, which is a 1 hour order block. So price at some point is gonna have to come all the way down here. So since this is a 3 lot sale, once I go into profit, let me see, I'll probably take some of that off the table, and that's roughly about 207,718 pips. Yeah, 20,000, no, 207,718 pips. Yeah. So what I'll do is I'll go here and put a trailing stop at that amount of pips. 207,218 pips. I believe that's what it was. 207,218 pips. We have 207,218 pips. So that means as price comes down, I need to take this off because I don't want that to take it off the table. Let me push it down to here, right there. Now, as price comes down, I'll manually close out certain parts of this trade. But I'm gonna remove this because from there down anyway is all liquidity. So up until price gets to here, from here where this order block is back up to where I got in, or this 1 hour order block, is all liquidity. As price comes down and I go into profit, once it gets here, it'll close the trade on its own, and then I can look for price to pull back, but it'll pull back as it goes down and hits these liquidity stops, these imbalance and liquidity stops. Here's another liquidity stop here. So when it gets to these liquidity stops, what it often does is it pushes back up to make a higher low. Oops, sorry, I didn't do that. It pushes back up to make a higher low. Once it makes this higher low, it pushes down. So as you can see here, it came down, made a higher low, and then I mean a lower low, and then a lower high. Because this lower high here is lower than this high, and this lower low here is lower than the previous low, which was here. So you come down, you make a lower low, a lower high, and then a lower low. This doesn't count as a lower low because this lower low is higher than this lower low. So this would make this a lower high. So we come down, lower low, lower high, lower high, lower low, lower high. But when price closed below the low of this candle here, you can see price continued down, and it did the same thing here, but I'm not counting, again, I'm not counting this as the lower low. So you have to keep that in mind when you see something out of balance like this. So came down from here, lower low, lower high, lower low. So this is why this is pushing back up. And it may not go to here. It may come to here. Once it comes to here, I should take 90% of my profit off the table and let the other 1% run. But I'm trying to wait and see what this is going to do. At any rate, that's how I trade market structure and order flow. It's the best way to trade. I don't have to use any indicators. I can see it based on the higher time frame, based on what price and price action is doing. So it helps me trade without having to put indicators all over my chart. Because I don't care what indicator you use, it's lagging anyway. The indicators are always lagging. I like trading with price action because it's true price, it's pure, and you know what price is doing. At any rate, uh, hope you guys got something out of this video, uh, and it helps you become a better trader. Remember, look at price structure on a higher time frame. Always know what direction price is going in terms of the trend. And if you've been following Bitcoin, you know Bitcoin has been going down for quite some time. It may have these corrections like it has here to pull back, but it never broke. It never broke this high right here to make a higher high. It never broke that high. And so when it didn't break that high, and so when it didn't break that high and it starts making higher lows, you know it's going down. It's going to continue down. It's going to, and this is not just with Bitcoin. This is any pair you look at. I don't care if you're looking at regular forex prices. I mean pairs. I don't care if you're looking at indices. I don't care if you're looking at stocks. This works. Order flow works for everything. Everything. Order flow works for everything. Um, if you get in too soon, like I possibly could have here, because I did not wait for price to return this order block and get a reaction, you have to be patient enough to hold it based on the fact that it could possibly go here and you could be more negative than what I am now. But at some point, when it goes there, it's gonna continue down. It's gonna continue down. So you may be sitting negative in profit for a minute, but eventually it'll go down and it'll go into profit, and you can take your money and get out, or you can hold it until it gets to here. It just all depends on how you want to do. A lot of people teach this stuff online and they charge you to mentor you. Some of them know what they're doing, some of them they don't. But if you watch enough of these videos, there's enough commonality in the videos to where you can learn this strategy or create your own and do this without having to spend large amounts of money to have somebody mentor you. But you have to be able to be coachable. You have to be able to stick to a rules based system. And something they can't teach you is you have to be patient. You have to know that when you've analyzed it and did everything and got in your trade, you have to know that you have to be patient and wait for it to turn around. At any rate, hope you guys liked the video, and have a good day.